Hello, everybody. My name is Victor Lang. Welcome to our webinar today on 10 sales tax rules that you need to live by. Very happy today to welcome you to the podcast. I'm going to start off real quick with some introductions. My name is Victor Lang. I am the Vice President of Enterprise Systems here at SmartBridge, and I'm joined with Paul Turek. Paul, you want to introduce yourself?
Hey, good morning or afternoon, wherever you are. We're excited to be here today and talk to you about these 10 tax rules. I'm a Strategic Alliance Manager with Avalara, and we hope you'll get a lot of good information out of today's presentation.
Fantastic. Thanks, Paul. Want to do a little bit of housekeeping first for terms of how this webinar will work for everyone. First, if you have questions, please ask questions. You can type those questions in the little question box within the webinar, and we'll do our best to field any questions at the end of this webinar. I know there's going to be a lot of content, so we're going to try to move quickly, but as you have questions, just type them in. We're going to talk a little bit about SmartBridge and who we are. Then Avalara is going to talk about them and their solution and why it's important related to sales tax and automation and really your overall digital transformation. The way we like to look at things at SmartBridge is the big picture, your strategic approach, and we feel you can't avoid taxes. And one of the big things is how can you better automate and control and reduce your risk related to taxes, and Avalara will talk more in depth about that. Then we'll go into how the automation works, and we'll have time for Q&A at the end. So first off, let me talk a little bit about SmartBridge. At SmartBridge, we believe in simplifying business transformation, whether it be automating your sales tax calculations, delivering new capabilities, mobility, business intelligence. We're about making transformational changes to your company to really give you a huge edge over your competition. And we live by our core values. Some of the key values that we live by that make us different from our competitors in systems integration and the JD Edwards space is, number one, empathy. We put ourselves in your shoes. We look for solutions and answers that you need based on your circumstances in your unique situation. So we try to understand our customers first. And then we provide the thought leadership and the entrepreneurial spirit, the innovation and the technology, the ideas and capabilities that can give you the advantage. And one of those things that we'll be talking about today is related to sales tax and Avalara. And then we believe in succeeding together. We don't win unless our customers win. So we work with our customers hand in hand to make sure you're successful and the overall solution meets your needs and you're successful in delivering it. And of course, the overall experience in implementing that solution needs to be exceptional. It doesn't work for us if, even though we were able to deliver the solution, if the experience of actually getting it done was not of the highest level of customer satisfaction. So those are a little bit of our core values and the things that we try to live by every day. And what do we do at SmartBridge? Well, obviously, we deliver digital transformation. That's one of our key overarching practice themes. We deliver the strategy and the enablement capabilities to really transform your business. Along with that, we focus on enterprise systems. And one of the key areas within enterprise systems is JD Edwards. Avalara delivers an integrated tax solution to JD Edwards. It's one of the key reasons why we're discussing this topic today. And along with that, we deliver overall solutions in the areas of business intelligence, analytics, and enterprise mobility so that we can deliver complete solutions from strategy through implementation to our customers. So I'm going to touch a little bit on digital transformation and why it's important and why this kind of ties into what Avalara delivers. Digital transformation is really about how do you change your business and take advantage of all these disruptive technologies out in the marketplace to really evolutionize your capabilities. You know, we go through all these old examples that you've all seen before. Blockbuster is being taken over now. It doesn't exist anymore. It's all about Netflix. No one hardly takes cabs anywhere. Everyone takes an Uber or Lyft. Walmart is losing tons of market share to Amazon. So all these newer companies that are taking over these old traditional companies are taking advantage of new capabilities, whether it be mobility, Internet of Things, connected devices, automation. There's tons of capabilities out there that you can take advantage of that will really revolutionize how you do business and let you leap ahead of your competitors. That's why digital transformation is important, because if you don't look into and reflect how you can take advantage of these things, you'll be left behind. And there's a set of things, understanding what those technologies are, which is kind of the thought leadership we like to provide you today. How can you better serve your customers? How can you better collaborate? How can you experiment and act quickly with agility? And then define those projects in your portfolio to enable those things. Digital transformation enablers, there's so many: cognitive computing, mobility, 3D printing, Internet of Things. What we're going to focus on today are the areas that can make you more effective, improve your customer experience, improve your capabilities. Two of the key things that we would use to cover those are: 1, process automation, and 3, cloud. These are two of the key things that Avalara provides when we talk about sales tax. And they all help you to measure those things by helping you reduce your manual transactions and make sure your business is highly streamlined. So without further ado, I'm going to go hand it off to Paul here. He's going to talk more about the solution and also the sales tax rules that you need to live by.
Hey, thanks, Victor. Well, we've got some great content today, some of the 10 tax rules we want to make sure that you're aware of. We're going to quickly do a screen switch over. And there we go. And so again, my name is Paul Turek. I'm with Avalara. I'm a Strategic Alliance Manager. So we work very closely with partners like SmartBridge and their clients to help them understand what it means to do tax compliance correctly, tax compliance done right. And let's just start off today and talk a little bit about how we work within the Oracle channel. And so today, in terms of SmartBridge and all the people on the call today, we're specifically referencing JD Edwards for the most part, but know that we are committed to Oracle in the sense that we connect to all these different systems within the Oracle ecosystem. But I think the main takeaway I want you to know is that we integrate with about 500 different platforms. So that includes e-commerce carts, for example, CRM systems, any number of platforms that you might be using in your business today to give you a seamless one-to-many solution to be able to automate your tax compliance. So without further ado, let's just kind of talk about why we need to even be aware of these 10 tax rules. And first of all, it's that sales tax is complicated and it's a statutory requirement. You're always at risk of an audit, unfortunately, if you do any sort of business that requires sales tax. So you want to make sure that you always understand the rules, or you have someone on your team that you're working with that can help you understand the rules related to sales tax in any state or jurisdiction that you might be working with. Manually working through sales tax is also labor intensive. There's also opportunity for human error, and it can be expensive, whether it's just the cost of doing it yourself or the penalties that you might incur as a result of doing it incorrectly. Now, it's also 100% non-revenue generating activity. So really, the only way you can earn a gold medal is for doing it exactly right. And it doesn't earn you any bonus points. There's no additional dollars that you're going to get in your bank account because you've done it correctly. If anything, you're going to avoid losing some money by doing it right. So when you have an activity like that, it makes sense to automate it with technology. And that's what we're going to help show you today on what sort of technology is available to make that easier for you once you understand these rules that you need to be aware of. So where do the states turn for tax revenue? Well, the quick one that I think we all think about, our individual income tax, is a way to feed the services that states and cities and counties have to supply to their residents and citizens. But in reality, the different sales tax that are out there, just between the standard gross receipts from sales tax and then any sort of selective special taxes that are on top of that, when you add those up together, it's actually 47% of the total state revenue. So the majority of a state's revenue is funded through these sales taxes. So you can be sure that when that's a major part of their income, that they're going to want to make sure that it's done correctly by the businesses that are responsible for paying those sales taxes on behalf of their customers. So again, it's time consuming, it's risk prone and expensive. And you can see some of the stats here on the screen that 48% of businesses believe that a sales tax auditor would find a mistake. So if you're one of those companies that's out there that falls in that 48%, why wouldn't you want to look at a way to make sure you're limiting your risk as much as possible to avoid any of the penalties and additional taxes and just the time and the pain that you'd go through in managing that audit? So you can see the total cost, the average total cost for a business to even just manage a sales tax audit is over $100,000. So we want to talk about today about some tax rules that you need to be aware of and some ways that you can keep yourself out of hot water and not end up in that bucket of folks who have to pay that 100,000 plus. So first of all is let's talk about Nexus rules. And Nexus is essentially creating an activity where you are now responsible for remitting sales tax, collecting and remitting sales tax to a state or local authority in which it's required. So it used to be days that you didn't do business or you didn't have a brick and mortar outlet in a particular state, and so you didn't have to pay any taxes to that state. Well, unfortunately, with e-commerce and the rise of Amazon specifically doing business in multiple ways across multiple states, there are now Amazon laws, or they're deemed to be Amazon laws that really affect everybody. So you want to make sure that you're collecting sales tax and remitting that in states in which you might be doing the following activities. And this includes having an independent sales agent, maybe a remote sales force, a direct sales force of some kind, even just participating in a trade show. So for example, if you might exhibit at a trade show in Las Vegas, but you don't have really any business there, and you end up picking up a couple new customers via e-commerce that happen to be in Nevada, well, guess what? Chances are you'll want to take a look at whether or not you are going to need to owe taxes to the state of Nevada just simply due to that trade show participation. So Nexus rules are very, very important to understand because it's going to be the determining factor on whether or not the sales taxes apply to you. So you can see that 70% of businesses today say they conduct sales online, but only 47% remit tax to a single state. So again, there's a discrepancy there, and that's a potential problem if you're one of these companies who's conducting business online, yet you're not paying taxes to multiple states, because chances are if you're conducting business online, that you have probably customers all over the country. You need to be aware of how their location and the business that you're doing affects you. So the rules also can be very complex and vary from state to state. And you can see on the screen here, we have some different industries that will have varying taxability rules. So again, it's important that you have someone on your side that understands these laws and how they affect you and whether or not you should be collecting sales tax and remitting that to the states in which you are doing business. So let's move on to number 2, services. Services are taxable, but not always. So again, hopefully the common theme you'll see throughout today's presentation today is that these laws are not cut and dry. So you need to know the difference between tangible and personal property, real property services, and professional services, because these states often define whether or not they're taxable differently. So again, if you're involved at all in any of these services, they could be taxable, but it's important that you have someone who can help you understand the laws and reference whether or not you need to be collecting sales tax. Now, product taxability is another issue under number 3 that you need to be aware of as well. So it's not just who are you selling to, what are you doing, but what exactly are you selling, because that's going to affect whether or not you need to collect this sales tax. So let's take a look at a Hershey's bar, for example. Well, a Hershey's bar oftentimes can be taxable. And then here's another product that Hershey's puts out, cookies and cream. Well, guess what? In some states, that's exempt. And so the determining factor here is whether or not it contains flour. So even just the ingredients in an item can change the taxability of an item. And so again, it gets very complex very quickly. So we have all these different variables you need to be aware of on whether or not you're handling sales tax properly. Let's look at a Rockstar energy drink. Well, often that is in fact taxable. And we go to a Starbucks Frappuccino and it's exempt. So here, the key factor is the nutrition label. So if it's non-carbonated with a supplement label, it's taxable. If it's non-carbonated with a nutrition label, it's exempt. So just some quick examples of product taxability based on the items you might be selling. Again, it's important to have an expert on your side to help you understand that. Number 4, understand that tax rates are not really tied to zip codes. So taxing jurisdictions don't always follow zip codes. In fact, it's pretty common that there's multiple taxing authorities within the same zip code. So really, zip codes are just a blunt instrument for determining sales tax, and it can lull you into a false sense of security. So I'm talking specifically about the JD Edwards system. You might be pulling tax tables or rates from somewhere. Maybe you found what you believe to be a reliable source that you're loading into the standard JD Edwards tax module. But in reality, if they're using zip codes as part of those tax tables, you actually might be missing out on a large chunk of taxes that you need to be collecting and could get you in some hot water. And so let's take a look at an example of that. So here's good old Greenwood Village, Colorado, which is a suburb of Denver. You can see that we've got one zip code, but 4 different sales tax rates. And in fact, you'll see that among these 2 businesses here that are featured that are really just about a block apart, the first location on Layton Street is 9.25%, while meanwhile down the street on Locust, it's 4.75%. So if you are only utilizing the tax rates on Locust Street, yet your business is up the block, you've just underreported your taxes by nearly half. So unfortunately, the states, the counties, the cities that are responsible for calculating and collecting these are not going to be real pleased with that. So this is a good example of if you're not paying close attention to how you should be collecting sales tax based on your exact location, that you could end up in some trouble and find yourself faced with an audit. So what's a way to avoid this? Well, geolocation technology is the best way to do that. And so what geotechnology is the ability to take the rooftop location of the location that is the taxable location. So it could be either actually the shipping location or the receiving location, and breaking it down to a latitude and longitude. So this ensures that you always have the right location and have the right tax rates that are applying to your particular transaction. Number 5, collecting exemption certificates is also a source of risk. So what is an exemption certificate? Well, it's a transaction where between you and another party where essentially sales tax is not required to be collected. And there's 3 primary exemptions to be aware of, and that's product-based, entity-based, or use-based. And so why it's important to make sure you're collecting these exemption certificates, having them up to date, and being able to produce them quickly is that those exemption certificates are essentially your ticket to not having to pay those taxes. So if you're audited and you have a situation where you have done, let's say, $100,000 in transactions with another party where the sales tax was exempt, but you can't produce that exemption certificate or it's out of date, unfortunately, the truth is that you're going to be required to pay those taxes because you don't have the document that validates that those transactions were exempt. So it's important that you have a tool that's going to help you collect, keep those certificates up to date, and be able to deliver them in an easy way in the event of an audit. Number 6 is to know the remittance processes for each state. So know where and how to remit sales taxes. So not only is every state different, but the different municipalities and counties in which you might be required to collect and remit sales tax are all going to be on different schedules as well. So of course, they don't make it easy on you. Not everyone has to file to a particular jurisdiction on a particular date. It's all going to be across the board. So if you're doing business across multiple states, even multiple cities and counties, you need to be aware of these schedules to make sure that you're paying on time, because failure to prepay where required is going to result in some audit risk, if not penalties already. And then once you're kind of on that list for audits, unfortunately, it's difficult to get off until you can show again and again that you have a process in place that is going to ensure that you're paying on time and at the correct amounts. So we touched on this a minute ago. Know the difference between a bill to and a ship to location. So sourcing is important when calculating these sales tax charges. So most states are destination based, but there are some that base sales tax on a seller's location. And so when we talked about geopositioning, it's not only important to make sure that you have the correct tax rates for the buyer, but you want to make sure that you have the correct tax rates for yourself as well, because you might be doing business perhaps even from a distribution center in a state where the seller's location determines the tax rate, and you want to make sure that you're making the correct payments based on that information as opposed to who's actually buying the product or the service from you. Number 8, and this one is becoming a important one more and more on different states' coffers around the country in ways that they fund what they do, and this is use tax. So in every transaction, unless it's exempt, there's always sales tax or use tax, one or the other, not both. So the sales tax is what's collected by the seller on the gross receipts or the transaction from the retail sale. Now, use tax is paid by a buyer on the consumption or use of tangible property or services in that state. So for example, let's talk about Colorado, which currently has this legislation getting ready to be enacted, which if you're doing business with a vendor who has sold you a good and they are not responsible for collecting and remitting sales tax in that state, but you are in Colorado, you likely have to make sure that you are paying use tax. And in addition, states like Colorado are requiring that vendor, that retailer that sold you that good, has to report that to the state that there was no sales tax collected, but use tax might be applicable. And so they're going to notify the state and they're going to notify you. Now, whether or not Colorado is going to aggressively go after companies for use tax is still to be seen. But know that use tax is just as important as sales tax, and unfortunately, the tax rates are not always the same. So again, another complexity that companies have to be aware of when they look at how they deal with use tax in addition to sales tax when they're the buyer versus the seller. Number 9, tracking sales tax holidays. So sales tax holidays are becoming more and more popular. So things like school supplies are very common right around the start of the school year. So right now you can see that there are as many as 17 states that have sales tax holidays. And so you want to make sure that you understand when those happen. You can also see that there's certain, say, natural disasters that can trigger them as well as a way to kind of help people to recover. So hurricane preparedness, for example, is a exemption period of time as well for tax holidays. So 17 states, you can see on this graphic that there's all sorts of reasons as to why they might be having the sales tax holiday. So you want to make sure that you have a way that you keep track of all of them and that you're keeping track of them correctly. And then lastly, number 10, audit trails are mandatory. So you want to avoid some common mistakes around failing to file a return, obviously is a big one, filing returns with errors, or just not reporting your use tax as we talked about previously. These are all things that if you don't have audit trails tied to them, or if you get caught up in any of these errors, this is a way to trigger an audit and unfortunately get you on that list to have audits triggered on you again and again until you can show a reliable way that you're avoiding these types of errors. And so how do you reduce that audit risk? Well, first of all is to do a Nexus study. And a Nexus study can be performed with the help of a company like Avalara. You can also have it done by a CPA. You want to make sure that that CPA or accounting firm has a lot of knowledge and in-depth knowledge about all the states in which you're doing business. So again, you don't have any gaps in that study. You want to make sure that you're being compliant from day one, especially new businesses, or perhaps you're moving into a new state. Maybe you're adding e-commerce as business that you're doing now. You want to make sure that you're compliant from day one so there are no red flags that affect your filing going forward. So automating with technology is an easy way to reduce your audit risk, and making sure you're working with someone who understands all these rules that we've gone through, and giving you the right protection to avoid audits whenever possible. So make sure you have a provider that understands your specific filing requirements. So we talked about products, we talked about Nexus, we talked about different states that you're doing business in, and you want to make sure the calculations are rooftop accurate. And then lastly, that you have a process for managing these exemption certificates, because again, those are just as important as filing the sales tax as having a way to manage the exemption certificates to make sure you don't end up having to pay taxes where you don't need to be. So what does Avalara do, and what are the products that we can provide to help keep you compliant? Well, we actually have three main pillars to what we do. The first is our AvaTax software. And so the AvaTax software is what focuses on all of these sourcing rules that we talked about, product taxability and address validation, and then just the rates themselves. So making sure that you have the correct rates that are tied into your system so that you're always calculating sales tax at the end use tax, for that matter, at the correct rate. The Avalara Cert Capture product allows you to be able to store and maintain and keep up to date all of these exemption certificates that you have to be have on hand in the event of an audit for these exempt transactions that you might be participating in. And then lastly, the Avalara Returns product, which is a quick and easy way to automate these returns for all the jurisdictions in which you're responsible for filing a return. So we talked about the confusing schedules that can occur between different states, counties, and cities. What the Avalara Returns product helps you do is keep those on one screen, be able to see when those are due, and help you automate the filing and remittance of those electronically to those jurisdictions in which taxes are due. So at Avalara, we actually are able to calculate and do calculate 1,800 tax transactions per second. We have over 20,000 customers today, and we have a 100% accuracy guarantee. So we stand behind our product. If there are any errors whatsoever that were to happen in your tax calculation and filing, we stand behind that, and we'll take care of those errors and the penalties that go along with that, because we know that we can accurately help you calculate the 12,000 tax jurisdictions and the over 100,000 plus tax rules that have to be calculated on a daily basis across every taxing jurisdiction in the United States. So with that, we have a question and answer session and the ability to answer some questions you might have had through the presentation today. I've got Christy Whipple on the line with us. And Christy, do we have any questions that have come through?
So I've seen a couple come through. The first question here, which you kind of already answered, is about they don't know where they should be collecting sales tax. What's the best first step for them to take? Right,
yes. And so again, the Nexus study is the best way to address that. So at Avalara, we can absolutely assist you with a Nexus study if you have some questions. Again, CPAs and accounting firms are capable of doing that as well, but you want to make sure that the accounting firm or the CPA that you use has an in-depth knowledge of sales and use tax and the laws in the various states in which you're doing business to make sure that they understand whether or not Nexus applies to your business there.
Okay, and the second question that I see here is, for your solution, how is pricing based? Is it based on user?
Great question. And so Avalara's software we're actually in the cloud. And so there are no license fees, there's no seat licenses. You can have as many users as you want on the system at any given time because we're software as a service. So we do connect to your software platform, whether it's JD Edwards or any other software platform we might be connecting to. We're going to connect to that via the cloud. And so we calculate the charges based on the number of tax calls or transactions that you're doing with our system. So it's highly scalable, and we're going to be able to let you have as many users on the system as you'd like at any given time.
Okay, I don't see any other questions yet, but we were recording this presentation, so if you want a copy of this, please make a note in the chat and let us know.
Great. Well, Christy, thanks for that, and thank you for everyone for tuning in today. Thank you to Victor for giving us the time today to present these 10 tax rules to live by. Again, I'm Paul Turek. You can see my contact information as well as Victor's is on the screen. And if you have any questions following this, please let us know. We'd love to be able to help you and make sure we keep you compliant. Have a great afternoon, everybody.